Hello, Warriors. Here's hoping everyone has an effective week in the market. How's everyone doing? Hello, AJ and Bran. Team, how are you? How's it going? Who's here on the team? Everyone?
Yeah, morning, mate. How you doing?
We got Ryan. Well, we got Ryan here. Hi, buddy. How are you?
All good, mate. You?
And good morning, Coach.
Hanging in there. Good morning, Blake. So, Ryan, you sticking with this yen short? I know you booked some last week. It's kind of a strange formation, the way it, unusual top, just spike and then give it all back. Where's your head at on US dollar yen?
Yeah, I think this one's firmly on the yield bus again. Yeah, my last cut was 149.53, I think it was. I might be close to getting stopped on my trailer at 85.
Okay.
Yeah, you look at it the short term, you think, yeah, it was that a bit of end of month in there, driving it higher.
Yeah.
But then look at the technicals, go on to a daily or something, and you've got a strong case to say that maybe there's a double top in play. You look at the daily or something.
Yeah,
go
the
back
weekly
to
show. The weekly shows that double top. Yeah.
Yeah. We couldn't quite get to that October high, but technically there or thereabouts, as Blake would say, good enough for government work. And maybe there's a huge top put in play there.
Well,
yeah,
actually,
government.
that would be Coach that would say good enough for government work.
And you know what, guys? Government work isn't too good. So anyway,
that's a great point, Dale. Great point.
Yeah, I just want to clarify. So I look at both the yen and the dollar weekly, and the dollar weekly was more negative than the yen. I mean, you had a red candle, outside day, and yet not a lot of follow through in euro. Has your view changed on this? Because I know a lot of people are saying that's it for the dollar. I'm kind of Friday I said, I think we could try 108. I still think you have to give the dollar the benefit of the doubt, unless it closes under, here 103 and a half, 104. And I know some people are looking for 104 and a half to be an important level here. Has the dollar had it, or is this just a corrective move in the dollar before we get another push? That's a big question.
Yeah.
Where do you come down on it, buddy?
It's hard, as I said. I think we're lockstep in yields at the moment, so you've got to watch that 450 in tens. That was a level I had on my chart last week or for a while. We held it. We had a little nibble under, but we held it. But yeah, it's made euro dollar's made the move. We've been waiting for it to finally push up. It got up through that high 106s. It's broken 107. That's a key moment. Breaking that. If it holds that, then there's further upside to come. We're probably 108 next. If it doesn't go there straight away, but
well, I've been kind of holding out for 109 to 61.8 level. Yeah, we'll see. When you think about everything that happened with yields breaking lower and the dollar breaking lower last week, the gold really didn't take advantage of it. It was kind of an inside week, starting off lower. I think you could be patient and get better levels to be a buyer in gold. Silver's acting better, gold silver ratio, but silver didn't make hay out of those same two circumstances either. You have a view on this, guys? I know a lot of people are thinking that
I might be the other side of you on gold.
Okay.
I'm thinking now we finally see a bit of a resistance coming in. Is that us sort of pricing out the Middle East stuff now, accepting what's happening over there and that it's still in a bit of a bubble. And gold, it's putting in a bit of a fight up at 2,000. I know Blake's spoken about this as well. And I think that's, you if you tried to short it all the way up, you've probably got your fingers burnt. Now we're seeing a bit of resistance coming in that you can actually lean on. So, through shorting at 2,000, 209, stop through 210, something like that, you've got your risk defined, and you've got a bit of evidence to say that we're struggling up there now.
Yeah,
we're not out the woods with the Middle East stuff, as we know.
We're on
but
the same side. I still think that there's a shot to retest the lows, which is kind of a very contrarian call after the big rally we had. I think people will be buying retraces all the way down. Anyway, and silver, until Friday, silver did nothing, and it had that big 40-cent up day to make the week look good. But again, we're kind of trapped in this range here. I wouldn't rule out a stop hunt over here, but I still think we'll take this out, which would take it here. And yes, Forex Trader made a great call. We have some smart traders in our room about, he called the big break in the dollar before the NFP. So Aussie down a little bit. I still think there might be one more chance to buy Aussie at the lows down here, especially if we get risk off, which I think has been made illegal. But yeah, it's liquidation only, or this is definitely surprised me. Although I said back over 42, you gotta reconsider. What do you think? A lot of people the melt up guys are back. I'm not so sure about that. How about you with risk?
It's another one of those situations, isn't it, where you get a poor data point where people are potentially losing jobs, and stocks go up. It's still in bonkers world, bizarro world.
Yeah.
That you see potential economic weakness reflected in stocks going up. I was thinking this year.
Yeah, go ahead.
Sorry, I was saying, we were thinking start of this year, are we going to see stocks actually reflecting, fundamentals at last? But obviously not. Still.
Yeah.
So where they go from here is anyone's guess.
I mean, Blake kind of described, bear market rallies are, in your face, sharp, not real long lasting. That was all week. That's just, every day we were up. I guess we'll see. I think even if the bulls are right, going to new highs, I think there's at least a pullback to 42.50 or so coming before that happens. So I guess we'll see. And one thing, I was talking to a trader buddy of mine, and regards the bond market, and people start to embrace that yield to peak, really start to embrace it. It could cause some liquidity issues in stocks as people reallocate to bonds because they love getting that 5% in the money market account. But then in a month, if it's 4, they're going to want to lock it in. I think that 430 is kind of a logical point for 10-year to pull back to the previous high. So if they start reallocating, that means they sell stocks and they start buying bonds. That could be a liquidity problem for stocks, because I think most people were not buying bonds down here before the turn. I think most people have said, God, I'm never going to touch a bond again. Yeah. What do you think?
It's possible. We've seen that sort of trade stepping in, haven't we? Every time there's been a big rally in bond yields, someone's come in and said, I fancy parking some money there. And you're right, it's going to continue. We've been saying probably since the summer, late summer, the end of this year, beginning of next year is going to be about the rate cut trade. What did I see? Every headline after the ISM, the NFP was talking about money markets pricing this cut, that cut, the other cut, Fed swaps, BOE, ECB, Fed. All the headlines are not markets expect another hike. It's markets pricing cuts. So hikes are done. We're out the hike cycle unless there is a significant turn in inflation, unless US economy powers on like it has in Q3 and heats up. We're done with hikes, and the only other way now is cuts. So you can't see yields really going that much higher on the interest rate basis if interest rates aren't going up anymore.
Okay. David,
and I was just going to say, I think rate cuts. I think it's still real. Like people are talking about them, but I think the market's going to find out that they're still very far away. You know, especially with conditions as tight as they are. So you know,
exactly.
I mean, so people will talk about cuts, but the reality should set in at some point here in the next few. I would say by the end of the year that people realize that, you know, having rate cuts priced in for, you know, summer of next year is just not appropriate. And by the way, go ahead.
That's the initial
trade. That VIX
Yeah,
weekly is a sign of real ultimate complacency. That's the biggest range I've seen in a while. You know, back to 15. This market is you know, set up for any negative surprises now after what happened. This says all clear to the end of the year. Year-end rally's underway, and you don't have to worry about anything. I don't know.
That's
Everything that's happening in the world, I don't think the VIX should be at 15. But you know,
that's
who
the
am
thing.
I? Yeah.
The market always gets more dovish and bearish than it does bullish and hawkish, and the market's going to flap around each data point, you know, supposedly pricing cuts, and it's going to go to the extreme and it's going to go too far, and that's going to be the first trade. The first trade is trading against extreme dovishness, and we know the market's going to go there. So that'll be the first trade, and then the second trade will be when they actually do start to cut, and getting on that trade. So, you know, if the market does get overexcited about cuts, fine. I'll be looking to fade that move because, like you say, Blake, it's going to get, you know, the Fed aren't going to cut that quickly.
Yeah.
And then the next part of the trade will be, well, when are they really going to start cutting and where are they going to cut to?
Right. And remember, I mean, the cutting is when economic data is really slumping, which we just don't have. And if economic data is slumping, it's probably going to be weighing on the markets at the same time. So yeah, so we're still ways off. Hey, by the way, Dale, I don't know if you noticed, but Grega's here today. Grega's making an appearance. So
okay, I'd like you know, his view on oil, because you know I follow XLE, which is the energy ETF, and we've been down here. This is daily at 84 a few times. And this weekend, what I did, I looked at, you know, what really performed last week and what didn't perform as well, meaning the things that performed great are not, you know, your viable shorts, but the things that did not. And oil happens to be one of them. You know, if this rally fails and we take out 84, it measures back to the summer lows. So it's kind of do or die in the energy play, and everyone's very long energy stocks. It's been a favorite. I mean, you can't find too many people who, you know, don't like the long side of energy stocks, but I'm just saying it's knocked at the door twice now, and if it knocks at the door again, it's going to open the door. So be careful with your oil holdings in stocks, and maybe we could just turn it over to Grega. Grega, you want to share your charts? I'll stop sharing and you could come in and show us your wave work.
Yeah, sure.
Okay, buddy. There you go. Take it away.
Okay.
Can you guys hear me? People are saying my mic is low. I have it near my mouth.
Yeah.
We're a little quiet.
You did a little faint, but yeah,
right.
I mean, not bad though.
Okay.
Okay.
Right. Go ahead, bud.
Yeah. So can you see the screen? I'm looking at emerging markets. Yeah.
Yeah.
I just think that these emerging markets are pretty interesting. We had a pretty nice reversal going last week. So I think that this bullish pattern suggests that potentially we have even resistance in place for the US dollar, because I know that dollar index, obviously it depends a lot on the euro. Euro is still a little bit weak, but if dollar is getting weaker, I would not maybe touch the euro. I would mostly focus on commodity currencies. We have seen some very nice turnaround on Aussie last week, and looks like that this is a bottom forming. We had this ending diagonal here at the end, and we are obviously now ahead of RBA. We are moving into this resistance. So I think that maybe market a little bit is overextended here on the intraday basis, but buying pullbacks here could make sense. I think that very nice support could be around 64.50. We have a very strong we had a very strong close on Friday on stocks. So I still think that Monday, Tuesday, which normally will follow the patterns from the end of the last week, I think that further gains here on stocks could potentially be very nice by the dip scenario for the Aussie. Also, I would mention dollar Mexican peso. This one has recently here at the end of October failed to break this falling trend line. We had a very nice but deep corrective recovery. So I think that more weakness here could be in the cards for dollar Mexican peso. Of course, this one goes hand in hand with risk on flows as well. And if we look at the S&P 500, I know that it's a little bit tricky since we are in the mid of a very big range here. But I think that even if this current recovery will be corrective, okay, still should be made by 3 waves. So I think that we recently broke out of this wedge. Okay, so even if you ignore the Elliot Wave levels and just trying to focus on basic technicals, we have seen a pretty nice impulsive rise here, breaking this wedge line. So I think that that's the first leg of a minimum 3 wave recovery. So firstly, I thought that we will stop somewhere here around this wave 4 for the full 3 wave movement, but looks like that this still will be only the first wave A. So I think that much more upside here could be seen on could be seen the S&P 500. But I'm not sure if we'll see a retest of these July highs. I still think that there could be major resistance up there. Okay, but overall, it looks like that for this week we have some pretty nice price action, very clear directional moves, and I think that dollar could suffer further.
So you think the dollar can suffer further? I agree with you. When you're looking at the euro, what levels are you looking at? Because I'm very specifically going to be looking for levels above 108 to be on the short side. Like that's what I think.
I think that even if the move is corrective here on the euro dollar, that we definitely have a room for 108. Notice that I'm tracking from last week lows from November 1st. I'm observing a new impulsive structure, which has to be made by 5 waves. And for now, that's still not the case. So 108 is potentially still coming into your resistance. But
all right,
if dollar suddenly turns around and gets higher again, then euro shorts should be probably first on the list.
Yeah, and I agree with that. That's kind of what I'm thinking. So appreciate your views, Grega.
Pleasure.
Yeah, I'll take it from here. So Dale, you had mentioned, Dale, that you were looking for maybe a move up to 109 in the euro, and that's the 618. Is that correct? Maybe he stepped away. He might have stepped away for a minute. So let me just clarify a few things here. So when you got the euro and you've got 109.75, that's a little bit higher. I don't know if we're going to reach for that level. I mean, you know, Ryan, what's always interesting is the market tends to go a lot farther than you think, right?
Yeah.
We're getting some pretty bad feedback
from me.
Yeah. And it looks like we lost Dale. Hold on really quick. We lost Dale. He just texted me. He said, I don't know what happened.
Maybe a Zoom thing.
Sorry. I'm just responding back to him really quick. He goes, I just don't know what happened, why he dropped off. Well, hey, we're still here. So anyway, going back to the euro and what we were talking about with the euro. So as I was saying, the euro recovery can last, or we can see a recovery in the markets, but sometimes we go a lot further than we expect. Like I am expecting for a move around the 108 level. I think the 108 level is going to be a realistic expectation, especially as you got the 200-day moving average right around there. 50% retracement is a little higher than that, but me personally, I can't see a move taking us all the way to 109 and change, which is the 618. And but like I was saying, things can go a little bit further than expected. But let me ask you this, Ryan, since you guys talked about it probably this morning.
I'm back.
Oh, Dale, you are back. Okay, good.
Really strange.
What happened?
I don't know. My internet's good, so that's a weird one.
Yeah, it was a weird one. All right. Well, welcome back. And so we were just talking about the euro making it back towards 109. The 618 is at 109.75. So it'd have to really stretch its legs to get up here if we were going to go do it. But I wanted to ask Ryan, since you were probably on with K-Man earlier today, what are your thoughts about the Aussie and the RBA this evening? It's a 50%, and I say this evening, it'll be, obviously tomorrow in Asia, in Australian trade. It'll be tonight or this evening for those of us that are in that are in North America or the Americas over here. What do you think is going to happen with the RBA? Because there's like a 60% chance that they're going to raise rates. Do you think they're going to do it?
I don't know. You never know with those clowns. They have a law unto themselves. I don't think they have any real reason to raise. They'll prefer to keep it in the back pocket. But they have, a bit like the BOC, they have, sidled a little bit more towards the hawkish side. They've kept a rate hike on the table throughout their last pause meetings. So it's not been off the table. Can it? I don't know. I really don't know if they will or not. But I've got that zone there. 65.20 is my area. 2040 is my area. That's, as I said on the flow show, that's the 107 in euro dollar is the 65.20 in Aussie dollar. So we need to take that out. If this move is going to continue. If it doesn't, we stay in the box and maybe go on to make a new low and continue the downtrend.
So, I've been, obviously, because I deal with Chris Weston every week, and he, he's in Australia. He seems to believe they are going to raise rates today. But if they don't, they got the market's pricing about another, 0.5%, 50 basis points of hikes from the RBA by year end. So what'll be really interesting is if they say, they do what you said, they keep it in their back pocket, for the future if they need to. You might see a quick dip in the Aussie, after rejecting the 65.25. We might get a little bit of a dip in the Aussie, and that might set up for a good, counter trend long. So that's something else to think about too.
Yeah, as long as the dollar's remaining pretty weak, the US dollar's remaining pretty weak. And I think it doesn't matter if they're going to hike. It doesn't mean the Aussie dollar's going at 68 just on one 25 pip hike. So if they don't, then I think a fade buy on any decent dip is what you need to look for.
All right. Well, Dale, we talked about this last week about the dollar index, dipping back into the 104s. Looks like we're trying to do it.
Yeah.
I mean, it
and
does.
You have your line comes in around the 200 week, I believe, the 200 week moving average. There it is. So that's kind of the line in the sand for whether or not the dollar has re-entered a major bear market. That's
got it. Actually, the 200 week moving average is down here. This would be
the 50.
That's a 200 50 50 period 200
okay.
Wait, 50 period weekly average. Jesus, it's hard to say since you don't say that often. But that looks like corrective, and this is where we have to start going, is it really bearish or is it just corrective? And that's why I agree with you, Dale. I am looking to sell the euro higher. you know, and speaking of higher,
Could try it.
look, yeah, but look at sterling. I mean, we
Yeah.
just touched the 200-day moving average today. I know if you guys were you know, in the you know, ForexAnalytix chat room, we were just, you know, talking about the sterling getting up towards its 200-day moving average this morning. You can see it right here in the update. You know, we hit 161% extension, 200 DMA, and we came off pretty quickly over the course of the last hour. You can see it, whoop, nice little reversal. But let me ask you this, Ryan, since you live in the UK, are you bullish here?
Am I bullish here? No.
Okay. Well, I mean, are you bullish? Do you think the sterling is going you know, towards 125?
Yes, that's possible. This is cable. It was 121 last week, and now we're at what, you know, we've already been up 124 and a quarter. So
now people are going to talk about 135. Just
yeah,
kidding.
well, they can carry on talking about 135, but yeah, you know, you never know with cable. It can stick on another 100 pips today and be at 125. Is the pound strong? No. Is there a reason for the pound being strong? No. This is dollar weakness, but there is a bit of strength versus the euro if you look at euro sterling. But again, I don't know if that's just the quid, you know, with longer legs than the euro, so it runs faster and further. But that's looking a bit. It's signaling a failure again up at that 87.20 area, and that's
looking a little wobbly, right?
Yeah, been waiting a while for that to break properly to the upside, and it just hasn't come still. So yeah,
Ryan, I heard you say last week when this is trending down, this pair, it's risk on, and when it's going up, it's generally risk off. Was that you?
No, I think that was Kay, the K man.
Oh, okay, all right.
Is
that do I have it correct?
Yeah, he was saying that the pound can be a bit of a risk currency as well. So when you know, when things are doing well, everyone buys the quid. But yeah, so this is one of the trades you got to play. You know, if you think the Fed are cutting rates, then you want to be long cable. But if cable goes to 127, 130, and the market think the Fed's going to cut before the BOE, you've got to ask that question whether they're right or not. So that's the sort of extreme move I'd be looking at if the market gets overly dovish on the Fed. You know, then cable's going to give you some good bang for your buck being short.
Yeah. Now we have UK GDP a little bit later this week, I believe on Thursday morning, if I'm not mistaken. Do you think that's going to be a mover? Because I think, and correct me if I'm wrong, UK advanced GDP might slip into negative territory, which would be accentuating the stagflationary risks of the UK, right? If it comes in negative.
Yeah, I don't think it will come in negative because the monthly numbers suggest that it shouldn't. So I think we're expecting 0.2%, but as I've been saying, whether it's 0.2, 0.1, minus 0.1, minus 0.2, it doesn't make much difference. Growth is weak. Yeah, you know, it doesn't matter minus 0.2 or plus 0.2. It's irrelevant really, except for the headline writers. But yeah, I don't think it will come in negative. They're probably about right with 0.2% positive expected.
Well, in about an hour and a half, we have Canadian IV PMIs. I think we got to watch them because the dollar CAD, it really broke lower last week. It fell a lot more aggressively than I thought it was going to. We just sat up here and we were perched right at this resistance, and then when the dollar buckled, the dollar CAD really came under some pressure. We are at a 50% retracement, so I think if you guys, and at the ironically at the 50 DMA. You can see it right here. And that today's low hit the 50 DMA. So if you guys are trading the dollar CAD, if those, you know, IV PMI numbers come in a little bit hotter than expected, you know, I would just be real careful if we start, you know, breaking below 136 and a quarter. Now, the flip side is I know a lot of people have been waiting for some Canadian dollar weakness to be long dollars against the Canadian. I don't know. That was such an aggressive move that I'd be a little nervous right now.
Maybe we could go to 133, Blake. especially if oil, starts heading up again.
Yeah, I mean, maybe 133, maybe this level right here, maybe the 200 DMA. Those would be, for me, those are levels that I find more attractive to be on the long side, especially after the false breakout up here. That's the thing that technically worries me a little bit about the dollar CAD, about trying to buy it down here. It's like it looks, as Grega would probably say, it looks pretty impulsive. But I'm going to say that it is the bottom of the hour, and Dale, you have an interview, right?
Yes, JJ's here.
Cool. Well, I want to say thank you, Grega, for making an appearance today and giving us the views of from your Elliot Wave point of view. Because if you guys want to learn how to get that analysis, you can always go over here to ForexAnalytix and get a lot of Grega's analysis, at least on these 30 instruments that we have here. So thanks, Grega, for being here.
Thank you, Wizard.
Thank you.
And thank you, Ryan, and nice to have you back in the saddle on the Flow show.
Thank you very much, mate.
All right, and then Dale, I'm going to pass it over to you so you can have a great interview with JJ.
All right, well, thank you, Blake and Ryan, as always, and Grega. Always good to have you, buddy. And JJ, welcome back to F.A.C.E. How are you?
Hey, good, Coach. How are you? Thank you for having me. Good morning.
It's great to have you back, JJ. So if you want, you could share your screen. And we had one heck of a week last week, 1-2 punch of dovish action. Do you think the Fed is signaling the end of tightening?
I'm
Go ahead.
I'm glad you asked that question because I have no clue what the Fed is doing. Right? I absolutely have no clue. But
it's honest.
But as a mechanic, I can tell you that we're in another one of these beautiful sneak short squeezes that this market has done. This market over the last couple of months, the summer short squeeze was a beautiful squeeze. And we're having another one today. We've got 3 gaps underneath us.
Look at that.
And the gap, the gap that we're having down here, this one here, that was a 2-tick gap that failed to fill. And just amazing how such a small little detail can give you a little foreshadowing. When there's no supply, don't be short. It's something I learned from, because in the old days we would, somebody would call you from I was up in Canada, so we'd have guys on, one of the desks, and they'd go, hey, we got to sell out, 2 million shares of ABCD hitting the market, right? Because the guy was a no pay, but some promoters, they're doing. Because we had 13-day settlements, so they're always spinning debt in Canada. Often they use bulletin board paper as margin.
Collateral?
Yes, with 13-day settlement. This was the good old days. And so they'd say, look, there's 2 million shares hitting the market. This guy failed to pay and he's not answering his phone. So we go sell 20,000 short. They nail it down with 2 million shares. We cover and we buy drinks that night, right? That's, you don't short unless there's a seller.
Yeah.
Right. And
are there sellers up here, JJ, to take the market back down into the gap? I'm looking specifically at what you have designated as halfway point, 42.57.
Yeah, I think we're going to go sideways a little bit because, supply is underneath 4,300. It's in a distribution area right now. So it's going to take some time to slowly leak that supply out, because you might as well use that leverage that the shorts are giving us. The thing is, we as retail, we always get caught in the front end of that move instead of waiting until the market starts to slow down, until the buyers start wanting to pay that higher price. As soon as the shorts see some supply, they're going to drop their bids. As soon as they drop their bids, these order books are thin, the price drops down. And that's what we've got to wait for. Right now, there's such a strong bid at 43.47 this morning. It's exactly where the last half hour's low was on Friday. That's where they got them. They always get people in the afternoon on a Friday, right?
Yeah.
They always get people on an afternoon on a Friday.
That's a great point because people let their guard down. I find that happening to me sometimes on Friday. I feel, because I really don't want to initiate new stuff on Friday.
Exactly. Yeah.
And you go, well, okay, that's a week, and then you have some kind of major reversal happening or breakout. because your guard is down.
Exactly. And you're tired because let's face it, by
You know
Friday,
what? True.
by Friday, I mean, look, I'm 55, so by time I'm not 21 anymore. I'm 55. By the time I'm Friday, my goal as a retail trader is to take 3-day weekends. Like not be trading at month end, not be trading at the end of the quarter, not be trading on Fridays, right? Isn't that why we do this? So we can, but I know when younger guys and ladies, they like the action, right?
Yeah,
so
they're trading the after hours sessions.
yeah, I mean, Globex is a great time to learn futures trading because it's so slow. You can see, and it's just the movement of inventory. I'm actually putting a course together strictly on how to trade Globex and the scenarios of Globex based on actually the business that goes on. Because Globex is basically taking the donuts from the stale donuts at the end of the day, you throw some powdered sugar on them, and you sell them to drunk people coming out of the club at 2 a.m. That's really
what metaphor.
That's what Globex is, right?
Okay. Yeah. Why don't you send your description to them? Maybe they'll use it.
Maybe the CME will use the donut analogy.
Yeah.
I'm like what we teach in our room is I call it blue collar trading. Nothing fancy. Like, where are the buyers, where are the short stuck? That's where the bid is. Where's inventory? Where are the sellers going to compete? Because it's usually a wholesale dominated market, right? The buyers and sellers are generally the same people, right? So, where are they going to be coming out? Okay, they're all competing at 85, and they're all bid at 70, and the shorts are stuck underneath it from Friday at the close. So, we just teach people a process to trade in between there, and make their money and then get out.
Okay, and the S&Ps are the main instrument that you teach and trade, right? Nothing else.
I only trade one market because I want to know it, like I only want to have one wife or one girlfriend.
Okay.
Then you get to know them, you get to really understand the market. It's all I've traded for the last 12 years, ever since I hung up stock promotion. And then it's nice because you get to know it and you get to know when not to mess with it too.
What should people trade if they don't have a wife or a girlfriend or a husband or a boyfriend?
What should they trade? Or I like if you're learning, if you're not consistently profitable, learn using the micro because you can't hurt yourself too much.
Okay.
Right.
Yeah, that's a great advice.
Yeah, and that's what we do. We get people on the micro. It's like pee-wee football, and then you can grow. And then what we do is we have setups or processes to do business that are scalable in time and size. So, and they're based on just really simple business principles like lack of supply or too much supply. And, we teach people a process to identify, test, trade, and then manage risk. So everything becomes like you train yourself like a fighter pilot trains themselves to pull the ripcord, the thing goes out of control. We teach people how to systematically get out of a bad trade without hemming and hawing. So it becomes like, it's a mechanical process that's physical. And that's the
so this is market profile, right?
Yeah, I learned using market profile because Dalton spoke to me when I was learning how to trade, and I couldn't memorize. Like I was looking at the chart before, and I give credit to those guys they've got moving averages and candle patterns, and I just couldn't memorize all that stuff because basically I'm an old market maker eye gouger, right? I didn't have I didn't go to Harvard or anything, so we simple. Where's the supply? Where's the demand? And how do we put a plan together to take advantage of that? And
what then the subscription rate for market profile if people want to start using it?
I pay about, I think, $60 or $70 a month with Sierra Chart. There's there's a company called Go Charting that's cheaper. It's web based, and what I do too now is I've learned profile and I've taken those concepts and I've put them on candles. So you can sit here and you can look, at my, daily candle chart. We had this accumulation balance into distribution, came through, went underneath balance, targeted the top, and now we're,
Was there anything telling you that we were going to have the kind of rally we had coming into early last week? There was nothing. I mean, that was a negative Friday close, right?
Yeah. Well, the thing was, it's those two gaps. The first little gap where those two ticks did not get filled. For me, as somebody who You know, one of my jobs was to orchestrate short squeezes for insiders. So when I see a gap, because I used to create gaps, I like there's 2 ticks that didn't fill. You mean nobody in the entire world would sell under those 2 ticks to fill that gap, right? That means there is a huge bid under there that is sucking up every contract because they're front running the gap, right? So when you see someone front running, oh, someone's in trouble. Trades to the upside, then you have things like single prints, which are market profile things. And, you know, and when you have 3 gaps stacking on top of the other, I mean, that's like when I would get people short a stock at $3, open it the next day at 5, move it to 8, and the next morning gap it over 12. You know, it's like the exact same principle. This just happens because all you know, large traders are trained the same. We're all trained the same. There's only one way to do it on the other side, right? You're moving inventory, right? That's all we're doing, right? There's, you know, and then we as retail have all different ways to try and interpret that business, but the business has never ever changed. You know, it's just grab a bunch of cheap stuff and sell it as high as you can for as long as you can. You know, and when we run out of buyers, put it on sale, just like Walmart. You know, there's a lot of people forget the market part of it.
Yeah, so I just put out your Twitter handle because people could tell you've been around the block. Okay, so I mean, I can tell you've been around the block. I knew the first time we talked. So, what are you looking to do today? Give us an idea of what your course of action is, if any levels are touched or taken out.
Definitely,
or this week. Let's just leave it open to this week.
For me, for this week, for today and this week, for the larger traders, longer time frames, we're in this balance area here from 4363 to 4400, and that balance I do believe is from June, and we've been up and down through it, above it, and all of the inventory in the short term is under this 44, just at the you know, the bottom of that gap. That's where we're cleaning out all the trapped longs above that. And so if we get up over 44.15, it's a different story. But for right now, I think we'll see some back and forth between 43.60 and 4400, and just to trade that level back and forth. And then what I do is for my day traders, I do the same concept of balance, and I do it on a 1-minute chart. You can see the 1 minute is really choppy. So we had an initial balance, double it, and then you just trade the levels. I haven't taken a trade this morning because it's been really choppy and really slow. I'll wait for RTH to kind of break, and I really want to see that 43.74 overnight low get tested.
Okay.
You know, I want to see that thing take a good punch. If I was a larger time frame trader, I'd want to see that area take a good shot to see what it can take. You know, if you go and show it some size, if you go down to 43.70 short and you show them 5,000 contracts, what's it gonna? Where the short's gonna step in and start buying aggressively? I'm always looking for the bid. Once I find the bid, then I know that's where I cover if I'm short. That's where I don't short. That's where I look to initiate a long if there's some price stability.
So easier to spot the bids and the offers.
Yeah, my whole job was to find the bid. Because my whole job when I woke, you know, when I sat down at the desk, my older clients would call me, go, okay, kid, go find the bid. That means go sell the stock down to where there's a large buyer. There's those large short sellers will show their hand, because you'll be tapping the market down a little bit, and then all of a sudden you go to sell a little bit of size, and the bid stays, and you're like, oh, right. And then, you know, what you do is you put a bid above that bid and see if he hops you. That shows you, you know, their level of desperation, right? Okay. So that's what we used to do when we were equity trading. Like, you see a large bid, you put one over, see if he hops you, and you keep hopping it, and then you sell into it because you need to liquidate, right? So, you know, those are the things that we kind of did, and that's what I use. You can actually see it so cool on a candle chart. You can you can see where the sellers are engaging. And right now you know that shorts are engaging under that 43.78, their bid to cover there. And we took a little trip, cleansed VWAP. We were in a distribution above VWAP for a couple hours right here.
Right? Where is the VWAP? Is that the red line?
Yeah, the purple lines. So yeah,
purple lines.
Yeah,
Okay.
so this is our balance accumulation, and then you distribute, and then when you run out of buyers, you put it on sale right back down to balance. So the way we trade this is we do something like we have something called a look below and fail and a look above and fail. And the look below and fail is when the market looks look below is when the market looks underneath a level and comes back up. We initiate long, stick our stop under that level, and then use these levels to take the trade off. So if you're long 5 contracts here, you sell one here, you offer one out. My method is as soon as I'm long, I'm on the offer, so I can see if there's any if they're going to come and take it. Because that's how I was trained. As soon as I'm long, I'm on the offer. As soon as I'm short, I'm on the bid, because I want to see what's underneath me. I want to see, if I'm long product and there are no buyers, there's no sense in me being long.
Okay. And
Yeah.
your time frame is 1 day.
Oh yeah,
No
no,
overnight stuff.
no, no.
You're a day trader.
I'm a day trader. I had a heart attack, so I need to get my rest.
Okay.
I can't be. I wouldn't sleep if I had positions on.
Wow. How old were you when you had a heart attack?
44.
Wow.
Yeah.
Yeah. How old are you now?
55. So yeah,
All right. Yeah.
yeah, yeah,
So sometimes life has to force you to
oh
make
yeah,
change, right?
yeah, definitely.
I know it.
Yeah.
Yeah, very young for something like that. Do you attribute that to the stress of
Yeah,
trading?
yeah.
Yeah.
I was a US. I was trading US securities out of Canada for offshore banks and stock promoters and things like that. So it
Yeah.
was a
A lot
very
of pressure.
lot of pressure, and the people that you were dealing with, they're not exactly the nicest folks in the world.
Yeah. Yeah.
And so it's always it's like kind of like trading for an alligator. You never know when they're going to turn around and snap you.
Yeah.
You very very few clients you could actually trust. So
Yeah.
it was stressful, and then business, and you start doing deals, and things start happening, and partners start fighting, and it's just the money and everything looks really good. It looks great on TV, but when you're
Yeah.
in the middle of it, it's sometimes you kind of like, ooh, these
It's a
people.
tough business. I
Oh yeah, yeah.
I don't think people really realize it. They think they could read a book over the weekend and then
Yeah.
do brain surgery Monday,
Exactly.
right? That's
Exactly.
what Jack Schwager said. He goes, "Yeah, it's the only business people think they could
Yeah.
read a trading book over the weekend and go in and start trading."
Yeah,
It was, yeah,
he's great. Yeah, I've read all his stuff too. It's just
yeah.
amazing.
Well, you know what? All of us here that are hearing you today are so glad that you survived and have
Thank you.
gained all this wisdom since then, and that you're sharing it with us and other people. You know, I for me, it's exact opposite. For me to day trade is more pressure than for me to swing or position trade.
Yeah, no, and
You
that
know,
makes sense, and that's the cool thing about the market is because you can find your niche and do whatever, suits you and your lifestyle, and you
yeah,
know, that's the nice thing about it. It's just getting there. That's the hard part because, nobody really tells you what to do. And so much of this stuff is unknown to people. And I think also, quite frankly, it's such a simple business concept, but we've taken it and we've made it so complicated that
yeah,
people don't know if they're coming or going, sitting or standing. There's so much information. What do you really need to know to actually make a buck? And how do you not lose all your money while you're learning? That's the thing,
yeah. Do you
Yeah.
let any of this outside stuff that's happening in the world affect your psychology anymore? Like
Uh,
Mideast war and
no, I mean,
what's happening in the country, and you're still in
no,
Canada, right?
no, I'm in the UK right now.
Oh,
I met,
okay.
yeah, I met my
Oh yeah, I
girlfriend here.
see your
Yeah,
screen. It's
yeah,
11 degrees
yeah,
Celsius and raining, which is
yes,
what, a typical day in the UK?
yeah, and it's not bad. Hey, from Canada, it's like the Bahamas. It's so warm here. You know,
You're a
just
character. Yeah.
so yeah, no, it's the news. I went through 9/11. My buddies were in that area. My traders, my market makers were across in Jersey City, and I had some friends. And it just that time I think traumatized me so much that I stopped watching news after that. So I just read the
Okay.
tape. I'll read like the Wall Street Journal and Bloomberg and stuff like that. But for me, it's kind of like reading the it's like a gossip magazine about what's going on the street.
Yeah.
Who moved from what desk to what desk, and what
Price
these.
is king. Price is king.
Yeah, it's just, I just want to see, where the goodies are, where they're going to move them, and how can I catch a ride and then jump off before they realize I'm there.
Why you moved from Canada to UK? Why did you choose the UK?
Well, my girlfriend was here, and
Okay, that's a good reason.
I really like it here. My parents lived here before I was born, so they really raised me because I was raised in Canada. My parents, I grew up watching Monty Python and
Okay,
fixing old British cars, so I fit in. And they're nice. I'm up in the north here, up in a place called Sheffield near Liverpool and
okay,
Manchester, and the people are really friendly, and it's a really social place. It's nice. Yeah,
okay. All right,
great
well,
people.
it was nice. It's nice talking to you every 3 or 4 months, JJ.
It's great to
Yeah,
it's
you really, feel like a kindred spirit to me with
yeah, I
the
you know
time
you're
you've been in the business and what you do and how you teach. And
yeah,
we're all appreciative. You're getting a lot of great comments today.
thank you,
People that
sir.
maybe haven't caught you prior.
Thank you. And
And yeah, go
I'm
ahead.
grateful to be around you because you remind me of the guys who taught me the business. And
Oh,
I don't, they're gone now, they're gone, or they're
yeah,
retired, or so I don't get those, the guys who used to smoke cigars in the office and
yeah,
play practical jokes on you, like say, your first day, go find the key to turn on the market. They
yeah.
they just, I miss all of that. So I love being here. It's great. Thank you so much.
All right. Well, thanks so much for, uh, sharing your stuff. And it's really good stuff and get people the perspective of trying to uncomplicate. People think they need 10 screens. How many screens do you have in your office?
Just two.
See, there you go.
I've gone down that road. When I was working, I had six, and then when I was
Yeah,
tried to day trade, I had four. And I still every once in a while start looking at that Best Buy website, going maybe I should. And then I'm like, no, no, no. It's like screens are like motorcycles. You get one, and then you're like, ooh, that's nice, and they become an
yeah,
addiction. Yeah.
yeah, yeah, yeah. I mean, I could trade off a laptop, period.
Yeah.
I have a second screen. It's nice to have a little extra real estate when
Exactly.
you're using some apps and stuff.
Yeah,
But
definitely.
yeah, keep it simple, stupid. Forrest Gump type of
Oh,
trading.
yeah.
Simple is powerful.
Simple, yeah, there's some simplicity. And the other thing is we need to be able to, like, trading is kind of like being in a street fight. You need a clear mind so you can execute,
Yeah,
if your mind has got too many things going, and then you get punched in the face and then you don't know what to do. You don't know how to counter. And being in those, that's why sim is difficult, even though it's good to learn the software. But when you're in a real trade and you actually know that you're losing money, your head starts spinning, and
yeah,
it happens to everyone. We're
yeah,
all
yeah.
human, right? So we
You
gotta
get
learn.
paralyzed sometimes.
Yeah, we gotta we gotta learn how to deal with that. One of my
Yeah.
traders once got stuck so bad I had to go kick his chair to wake him up.
All
But
right. Yeah. Anyway,
yeah,
JJ, great hanging out with you for
thank you, Coach.
20, 30 minutes today. And
Thank you so much.
I wish you a great fall
You
and winter
too.
trading season, and we'll get back together in the winter.
Sounds
See how
great.
things are going for you.
Thank you, sir. Have a great Thanksgiving.
Okay, JJ, and you can find him on Twitter once again at VWAP Trader One.
Yes,
And as you heard, practical knowledge and mucho experience. Thank you, my trading warrior brother.
thank you, sir. Have a
All
good
right,
day.
adios. And everyone, you could join the team on the Morning Edge in 19 minutes. Have a great day. See everyone for Turnaround Tuesday. Adios. Don't just count your pips, count your blessings. You're welcome, Laura, Andrew, all you guys. Glad you enjoyed. You too, Louise. Adios.